Hi traders, I'm going to show you an example of a bearish crab pattern that's set up on the hourly chart on the US dollar CAD or dollar CAD. This is a daily chart that we got up, and the first thing we want to do is identify our key areas of higher time frame support and resistance. Okay, so in this example we had price trading in a large range. You can see we have a nice downtrend, lower highs, lower lows, and then we started to consolidate, and you can see price is really just moving between the top end of the range and the lower end of the range. So we take our horizontal tool and we just sort of move it down to this area. This is the area right here that I was interested in. We've got a zone. You can see here we had price acting as support and then resistance. Look at the big spikes here, and then slightly up. You see these wicks here. Okay, remember there are zones. Okay, and the volatility on this pair is pretty low. You can see when you're dealing in not even a 30 pip zone here on a daily chart. But that's a key area. In terms of fibs, there wasn't really anything lining up with this zone here. If we compress the chart and we go from these swing highs, this is sort of the major swing, but as I've shown you before, this is a discretionary call because we drop with this massive swing, come all the way back up, and then drop again, and then rally again, and then we start releasing. So in terms of fibs, you can always try and fit the fibs to the chart, which is what I don't suggest you do. You can see here if we draw this larger swing down, 38% is up here at this area of key area of support here, possible resistance. If you move this down, see now you're starting to really curve fit, as I call it. But you can see that 38% lining in and around that area. Price retraced up to it, rejected. So this one didn't really have anything in terms of the fibs going for it at this stage, but we were trading in a range, so we understand the market environment. Now if we go to the 60-minute chart, this is where this pattern set up on. We had price trading in the range here, okay, and you see this drop, I guess, and price starts to retrace. So when this happens, what you want to do is you want to take your Fibonacci tool, draw from the high down to the low. Okay, see price rallies all the way up to the 62% and then starts to retrace. Now what you want to do is you want to first obviously understand what patterns we're looking at, okay, in terms of where has price stalled on the Fibonacci retracement. So when it's retraced to a 62 level and then starts rejecting, you want to think either a Gartley pattern or a crab pattern. Okay, now the crab pattern is one of the extension patterns. It's a very deep pattern, as I showed you in the actual pattern section. In terms of Gartleys, you can see we've obviously got this area of resistance here. We haven't gone over the Gartleys here. You can see resistance here on the 4-hour. Okay, so you could look at Gartley there. I'm just going to step this forward a little bit and show you what happened now. So once price starts to rally like this, okay, you can draw fibs from the low up to the high. And you see here that a confidence 79 and a 127, that would be your Gartley. Okay, and if you adjust this here, so you've got the retracement 79 and 127. For the crab pattern, you see it comes down to a minimum of 38% and then it starts to rally. Okay, so that's the first thing I'm going to look at. For the crab pattern, you're looking higher. Okay, you see this area here. Crab is the 1618 extension projection with the confluence of the 2618. Okay, very tight confluence here. It's only within what are we, 6 pips or so, 5-6 pips. Okay, and you see that daily area. That's that daily area where we're completing. So that's the top end of the range. Let me just step this forward a little bit. You see price spikes up into that area there. And then it breaks through. Okay, so there again, if you're trading a Gartley and it fails, you want to start looking, once it starts taking out the highs, you want to start looking for the possibility of a crab pattern, as long as it's completing at a key area of higher time frame support and resistance. Now you can see the completion zone here is up at that daily level, and what I'm going to do is just bring this line into the 1618 area, and if we just highlight this this is the level in here. Okay, this eclipse right here. So you can highlight these areas, and you've got plenty of time, especially on an hourly chart, to put limit orders in. And if we just go into our platform and we want to put a new pending order in, so sell limit order, and you can see we just passed sort of the parity area here. So 0, 0, and we've got 2, 3. I'm going in at 2, 1, so a couple pips below that level. In terms of stop loss, as I said before, these things normally work pretty quickly. Okay, if they're going to work, they really don't give much in terms of drawdown. So in terms of key areas, we've got obviously this level from the daily, that's 36 area. We put our stop just above that. So if we put our stop loss at, let's say 40, okay, so just above that area. So you've got the confluence here. Okay, a big move up like this is what you want to see with these crab patterns. So price is starting to exhaust itself in terms of flows, and this is the area here, the completion area. Stop loss either just above here. Again, I like to reference sort of key areas of resistance or support to place the stop loss with these patterns. Or worst case scenario, if I'm just going to place this in here, worst case scenario is above the 2.0. Okay, so if you put it just above that 2.0 fib, you can see it's obviously a bit higher, almost double, like 43 pips or so. Just let's have a look at the 4-hour chart in terms of resistance. So you see this level right here. Okay, this is a key high in the marketplace, and that's the completion of this bearish crab pattern. So you could put a stop loss just above these highs. You can see stop loss in sort of above these wick highs you see here and here. Okay, you don't need a massive stop with these. As I said, they normally work pretty quickly, or you know about it and get stopped on, so you don't need big stops with these. So let's just follow price along here and see price obviously screwing up the page here. Starts to consolidate a little bit at the 127. Remember, this is an hourly chart, so this is taking a good while to set up. Okay, you can see the pattern started to set up around the 20th of March, and you can see already sort of three days into the pattern here. So there's the spike up, bang. Okay, stepped it forward a little bit too quickly there. There's the rejection. Okay, now price rejects and comes straight back into the first level of resistance becoming support. Okay, and it rallies back up, fills more orders. Here again, as I said before, I don't personally like to trade these very aggressively in terms of reducing the risk. Okay, you've got a stop in place. You know, it's only 19 pips of risk. It's not major risk on an hourly chart like this. Remember, you're also coming off key higher time from resistance. This is a daily or 4-hour level, depending how you look at it. See how price comes down, hitting that level right there. So this is the first problematic area you want to watch closely in terms of, can price clear it? Okay, you can see price comes down, hits support, and then it rallies. See, it actually comes right down into that little block, that last bearish candle there. Okay, so you could take profits there. I mean, you would be getting over 1-to-1 on the trade, but like I said, you know, be very careful about getting risk out of these things too quickly, especially when you're coming off a key high time frame like this. Also have a look at these trend lines here. Okay, you can see we've got a few hits on this line already. 1, 2, 3, 4. I'll just adjust it. So we really want to see this area cleared and price closing. You see this level here, closing below that level. So we just step it forward. So there's the release. Okay, now this candle actually closes below this level. Okay, which is what you want to see. And you're coming up about 37 pips. In terms of reducing risk, what you could do, if you're very aggressive with this, you could move your stop down to just above this level here, so it's protected at least. Okay, you can see you've got this high right here and this close, because you're likely to see at some stage price coming back, testing this area of support and this trend line, and then coming back to retest this area. So what I'm going to do is just move the stop to break even on this. Move to break even, so if price does rally to new highs now, that's cool. Don't get taken out for anything. If we just have a look at this 4-hour chart, let's just zoom this up here. Nice big release like this. Okay, so you know when you're getting a close, and here you're going to see that actual candle close on the 4-hour. Let's just step this forward. There's the candle close on the 4-hour. Okay, once you see that, that's very good for your trade. Okay, and as I said, you know, with these extension patterns like the crab and the butterfly, you're going to be trading against a trend like this. Okay, short-term trend is always going to be in the opposite direction. You want to just find it and make sure that you're trading at very high time frame key levels. So you can see how price has broken down in that 4-hour and actually closed. Remember we spoke about that section on candle closes. We're actually closed below this area here. You see that? So you see the base candle closes below the bodies, and then we come back. We've actually retested that back end of the trend line, which is a good sign. The next level that you want to eye out, I'm just going to move this line down here, is this area. You see this high? Okay, that's a key level right there, as well as further down we've got these wicks here, and then the bodies. Okay, I like to keep a very close eye on the bodies, because that's where the majority of the flows are coming from, right in here. You see that last bearish candle? So that's going to be a target for me, 99.32 area. Okay, we just zoom this up on the 4-hour. Let's just have a look here. So here's price release nicely. You see this candle right here? Okay, that would be where I would look for buyers to possibly come in at this range, and I want to target this level. What you can also do, let's just get rid of this fib level. And this one, what you can also do is draw a fib tool from the low up to the high. Either one of these swings, like the very low up to the high. So you see you got that 38% retracement there. Okay, lining up with that swing point right there. That's a place you could look to take some profits. Okay, you'd be up about 57 pips or so. You could definitely watch that. The 50 area also, you see how it lines up with that area there. There again, that area right there. So these are all levels where you can see buyers come in. So let's just move over to that hourly chart, and we'll follow price along here. Right at that. So you see how we've closed below that actual trend line, and you see how we've come back, retested this level. That's a good sign for price to possibly move lower here. Coming down to that 38%, what I want to do is just move to the 5-minute chart, and I want to take some profits out at this level right here. Okay, so just go to that 38% there. I'm going to take half the position off, close part of the position. So we're at break even. We've taken half the position off, and what I want to do now is I want to target this base down here, so that 99.32 area. That's where I want to take the final position. 99.32 plus a spread of 3, so we're going at 35. Okay, and you see I've still given the trade some space to breathe in terms of not moving it down. You can definitely move it down below these levels. Okay, it just depends on how you want to manage these trades and how aggressive you want to be. Once we see price release like this, you see obviously we're moving down close to this area here. Once it starts to release like this, you can now move your stop down to just above this clear swing high on the chart. So swing high is at 99.97. So let's move it up or down to parity. I'll move it down at one area. Just follow price along here. Okay, so we've just been taken out on our position. Nice little trade there. I'm breaking down. You see this area here. Let's just see if we actually get a bounce. Didn't get a bounce there, but price continued lower. when she came down, you see this bearish candle right here came down to that block and then released. So there's the trade. Let's go to counter history. We took 52 pips off on half the position and 86 on the second part of the position.